Made it through the weekend. Hope everybody's weekend was restful. You're going to need it. It's going to be one of those weeks. I've already heard a lot of talk on Bloomberg. They bring on different people, and they're saying, "Hey, we hit the level that is a technical analysis point of reference for a quote bear market in the S&P. It's time to buy." They're not wrong. If you look throughout history, the death cross 5200 in any other market, which would be a sell signal and a bear market signal. Every time that's happened in the S&P, it's always been a buy signal throughout history. This would be no different, that we trigger a technical feature and everybody sees that as a buy. Yeah. Short-lived as that may be. So as we do every morning, we want to start with the economic events. What happened in the overnight hours? What is our expectations for today? A good place for this is Koifin. It's free. You don't need an account. They've got global markets, top news, blah, blah, blah. I did highlight in the chat a few things. One was from Finance Juice and another one is from Bloomberg's 5 Things You Need to Know. Again, all free features, not anything you would have to buy to subscribe to. Those are in the main chat room if you want to see those. Also, economic events on the day and Fed speakers for today. We had an unusual situation Friday. The PPT came back and activated on Friday. That would be the Plunge Protection Team. It is a real thing, by the way. It's not just some catchphrase that sounds cute. The European market had some news in the overnight. The euro made a decent move, and their bonds made a move in the overnight hours. One thing worth noting that we always want to ask the question of, in Asia and right now in Europe, what moved? What sector? And I highlighted it. The sector that moved yesterday is energy and basic materials. You know what it wasn't? It wasn't technology. It's really important to recognize that. It wasn't technology. It wasn't the financials. And yet they had treasury and bonds moving, and it wasn't financials. Two really important takeaways on that. Okay. So carry that forward into your trading day today. Corporate events. This is where you can find things like, who's going to be reporting earnings, blah, 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 industries. It's just a little go-to. You want to stop here first thing in the morning, take a look around. Is there anything really big going on? Yeah, the Davos event is going on. Yeah. At least they're back, right? It's a good way to look at it. The president put his foot in his mouth again this morning when asked about Taiwan. He said something about defending it without being clear in his original statement about how we would defend it. This is no different. No matter what president is in office, they're going to poke him with a stick and catch him little gotcha questions. This isn't a political channel. We're not going to get into it, but it doesn't matter what president, right? It's always like the on the Mack truck, they have that hood ornament where the dog sitting on the front of the Mack truck, it catches all the bugs, right? That's the president. It doesn't matter which president it is. You put him out front and let him take all the gaff. Nothing very likely is going to come from this. It's not like China is going to impose any tariffs or anything like that, right? There's not going to be any backlash from it. But speaking of China with the lockdowns, it is still a really important consideration to everything that's going on. How strict are the lockdowns? Are any new waves coming in? And anything that talks about lifting those lockdowns are really important. So you want to keep track of those. Those kind of news announcements can move the market. This is the European market wrap. If you are not in our Discord and can't see what it is that I was talking about that I shared, it's just a nice little bit of information. They'll do the same thing for our market after the close. They'll do the same thing when the Asian markets close. It's just a nice little place to go in and ask, hey, what the heck happened during the day today? Or what happened while I was asleep last night? This is also where you can find information about who's going to be speaking today. You can see that Bosick is on the agenda for 11 o'clock. As what happened Friday, there is no guarantee that this is all of the people that is going to be speaking today. Friday, we had a Fed speaker come in the afternoon and who showed up on Fox News. Didn't know he was there until it started popping into finance juice and we seen the market rally up off of those lows. All right. So just because you have a list of Fed speakers here doesn't mean that they can't show up somewhere else. So kind of be aware of that. Move into Thinkorswim. Look at your calendar. So it's Market Watch calendar. Turn everything off and then turn on Econo Day event. You can see we've got 8:30, 11:30, and that's it. So when you put this with these Fed speakers for today, by the end of lunch, we should be good to go, clear sailing into the afternoon. But again, we've seen something Friday we haven't seen in a long time. The Fed has been going out of their way to get people to quit buying the dip. Just literally every dip we got, they would come out and say anything that they could say to turn that market back down again. There was no plunge protection team. There was like the beatdown team until Friday. When we hit that bear market territory, the plunge protection team went back into effect, came out and started speaking. An unscheduled social media event where he said things that deliberately popped the market to the upside. We haven't had that happen in quite a while, so it's a really important milestone to keep track of. Now, that doesn't mean that we're done in any way. It doesn't mean we're going back to the highs or anything like that. Not yet. It's just noteworthy, and it's important to recognize a change when there is change, right? And that was a big change. That sucker cost me quite a bit of money too, but that's beside the point, right? You can't win them all, and you know, as things happen. But that's why we don't use all of our account when we take a trade. You never know what's going to happen. For today, once we are done with lunch, we should be done for the day. But with those additional auctions, be prepared to see a midday reversal of any kind. So if we're range bound, expect that range to end and a trend to begin. If we're trending, expect that trend to die or to flip over and go the opposite direction. The 11:30 auctions or the additional auctions through lunch are game-changing events in the day. Can't tell you how many times we've seen a reversal on the clock that matches those events. We are still inside of yesterday's range. The expectation is that we will maintain this range. So there are three scenarios that we could play out today. One is that we maintain yesterday's price action. Two is that we break through the top, and three is that we break through to the bottom. It has to do one of those three, right? It's not up for debate. So scenario one, if you break it down into zones, our first zone would be Globex high to Globex low. That would still be a part of the range day scenario. It's just a part of the range. Scenario two would be from our own Globex low to uh, Friday's, or I should say Thursday's Globex low. And then the third would be all of Friday from the lowest to Thursday's point. These three different zones still make up one large range. So if we are inside yesterday's price action, there's plenty of room to trend. You can see Friday, for an example, we had nice, clean trending price action, but it would still be a range bound market. We're sitting inside of yesterday's price. If you have a candle right next to the other candle, that's not trend, right? That's range. So that would be our range day scenario. A break to the upside, we would start focusing on the ADR. We have a 3% ADR right now. We're only up 0.8% this morning, 0.8. Right. So from our current location, let's just add 2.2. That gets us around 40.20. There's a purple line there. Very likely the weekly weekly close. No, it's the weekly open. So the weekly open from last week, where did we open? That's what it's marking. So last week's open. It's an institutional pivot point. That would be our expectation for an upside move. A downside move, on the other hand, we would be focusing on getting back through the range of yesterday. And the first thing we want to ask is, can the ADR even sustain us to get us down to the bottom of yesterday's range? So from our current location, we're up 0.85, give all that back, and then put a 3% move on the day. So we're going to measure out 3.8 since we would first give back the 0.8 and then make a 3% move. That does get us outside of Friday's price action, and that would also get us into new lows, and that would be the bear market territory trigger, blah, blah, back over again, right? So we're talking about 3790-ish. Below 3800 is the key to remember to that. So as usual, just recognizing what we can do in the ADR isn't enough. We also want to go in and focus on anything that we can bring in from the volume profile. Now, I still have a hard time trying to explain this to people in a way that makes sense. But where we were Wednesday was not at the top of the box, looking at it the way that it looks right now. The way that this box looks, or this 10-day chart looks, it only looks this way today. Yesterday or Friday, it did not look this way, right? So it's not like we came into the close on Friday sitting right there after having ran back up. That's not the way it works. And the only way that I can get anybody to try to visually see what this looks like, take a picture today of what this looks like. A 10-day chart, 30-minute time frame, do it at a particular time of day, say during my morning briefing, take a picture of it. Tomorrow, when you're looking at the morning briefing and you're looking at the volume profile, look at where we were yesterday, the shape of this thing, where price is in relation to it, from the bottom, from the top, in the middle, wherever we happen to be, and then look at it tomorrow at the same time frame. You'll see that it's not a continuous day by day thing. Okay. Every single day, it's like this entire thing resets. So we're only looking at it from today's perspective. Here we are in the morning. We're sitting at the low. What is our expectation? From the low of the box, we expect to go to the top of the box. It doesn't owe us that. We're not saying that's what it's got to do, but that's what we expect. When we're at the bottom, we expect to go to the top. To make that move to the top, we have to be focused on any kind of volume resistance. And there is a nice shallow area. If we can get back above our own Globex high, there is a nice shallow area that we should be able to move through relatively easy on our way towards the point of control at 4013. I'd say 4011 is the cog line, and that would be what we would want to focus on. When we're outside of the box, we say we're focused on getting back in the box, and we want to ask the question, is price moving back towards the box, or is it continuing to move farther away from the box? When we're at the low of it, we expect to go towards the high of it, to move towards the point of control. To break it down from here with our bear market discussion that we had just covered, you can realize there's a large amount of volume underneath us. And that makes sense because we've been range bound for the last few days. We built up a lot of volume there. And this is a 10-day, 30-minute chart. Take that into a 5x5. There is now an untouched point of control called a virgin point of control sitting below us at 38.32. So in that discussion of breaking down through yesterday's range, we still need to break down through the point of control of Friday. This point of control should be carried forward every single day until we finally hit it, because it is an untouched point of control. It's a virgin point of control. Now, what if this is the low and we don't come back here? Fine. Then at some point you would probably just delete that line. But I've got lines set from years ago and it hasn't changed any, right? Those gravity points, should we revisit these areas, are still in play to me, right? So technical analysis doesn't call a timeout just because it happens to have been gone for a while. All right, so that covers the ES. For the Nasdaq, notice that it's not up as much as the ES. Technology is lagging this morning, and that fits with what we already read out of Europe. Now, Bloomberg's had a number of people on this morning talking about Things are beaten down. This is a buyer's market. Get it while it's on sale. Blah blah blah. It's not the first time, right? It's a whole theme that they run. The only way the banks can get out of stuff is if we get those rallies, which is where they sell into the rip, right? They're not buying the dips, they're selling the rips. You think they're done yet? They're not done yet. They just need you guys to buy it, right? They need you to buy it, get this thing to rip and rally to the upside so that they can sell back out of it again. There is absolutely no indication whatsoever that we've capitulated or that we've found the bottom or that we're going back to the top. Now, don't get me wrong. Throughout history, we've gone to the upside in a bear market for days and even weeks, right? Look at the NASDAQ year to date. Look at how many weeks in a row we went to the downside. You think we're not owed at some point some reciprocation back in the other direction? Of course. Temper that with some expectation that we're not going back to the highs. So make money to the upside when we're going up, make money to the downside when we're going down, but don't go and approach this thing from like, oh, it's all over. We're good to go. No, we're not. Not even close. For today, which is our more immediate concern, 3 scenarios. We can stay inside of yesterday's price action, break outside of it to the upside, break outside of it to the downside. For the range bound scenario, break it down into different sections or zones. We have our own Globex from 20,050 down to 11,866. That would be zone 1. Zone 2 would be from the bottom of our Globex to the low of Thursday. And then from the low of Thursday to the low of Friday would be our third zone. 3 different areas of concern to be focused on. All of those would be a part of the range bound thesis. Our ADR right now is 4%. And with the Nasdaq trailing behind the S&P by nearly 3/10, it's not technology on the agenda or on the table today. Not yet. Remember, we need finance or technology if we're going to see a rally in the S&P and the Nasdaq. The Nasdaq 100 does not have financials in it, but the S&P does. So we want to go ahead and mark out our bear and bull market scenario. Focus on the ADR. If we add 3.4 from our current location, that would give us a 4% ADR. So 3.4 puts us right around 12.34. That would be very close to the open of Wednesday. And the open is an institutional pivot point of absolute value. That also gets us very close to where we opened up last week, the start of the week. And that's the one that I would focus on, 12,400. It's close enough to our ADR to fit. So where we opened it last week is our target in an upside scenario. And remember, that's not how far we need to go, just that we could move that far and it wouldn't even be considered an outsized move. That would be like just a shrug of the shoulders, like, yeah, so we moved our ADR today. What'd you expect? It's an ADR. What is ADR? It's the average daily range. How do you get that? Well, mine's a 21-day average. In a market month, you have 20 days. So in a 21-day average, we're asking on a day-to-day basis from the highest point to the lowest point, what was the average movement per day? And for an average, you need a tally of something. I tallied up the last 20 days and broke that into a daily average. So on a day-to-day basis, the NASDAQ's been moving around 4% per day. So we can easily move 4% today, and it would not be considered an outsized move. So now we're going to do our downside scenario. If 4% is a regular move and we give back 0.5, we can measure 4.5 to the downside. That gets us below Friday's levels. $4.8, actually 4.6 now. 11.4 would be my focus to the downside. We could easily go that far and it would not be considered extreme. Now, it doesn't only need to stop there, right? If we're talking about a market that's moving normally 4%, What if today is an outsized move, that it is aggressively bullish or aggressively bearish? Then it will easily break its own ADR. So this is like your bare minimum on both sides, bear and bull. Breaking that down into a 5x5. There is an untouched point of control from yesterday, a VPOC, just like we were talking about in the S&P. And there is one from Thursday over our head. No, Thursdays has already been tagged, so we're done with Thursdays. Just got too many lines on the screen. So we're going to widen this 5x5 and take it a little farther out, just to kind of evaluate, is there any other point of control that we haven't hit that we need to carry forward? Maybe one at 12.8. Yep, that one's still over our head. All right, so we still got an untouched point of control, but it's a long ways off. That one would be to the upside, VPOC at 12.8, and we have one down below at 11.57-ish. For the 10-day volume profile, it's important to realize that we are outside of the box. When we're outside of the box, we have every expectation of getting into the box first, then getting to the point of control, and then getting to the top of the box. When we're at the high of the box, we expect to go to the low, and when we're at the low of the box, we expect to go to the high. Now, again, looking back and saying, see, we were at the high and we went down to the low, and we were at the low here and we went to the high. The volume profile did not look like this on that day. This thing is looking at how many days we have and how many candles make up a 10-day, 30-minute chart. I'm going to throw a number out there and say there's 300 candles. I don't know. Do the math. Every time a candle drops off the backside here, the volume that it's reading changes. So if this one candle right there happened to have contained a very large amount of volume that helped this POC be where it is today, and we have a 30-minute candle go by and we lose this candle, we no longer have it, then we lose all of the volume that came with it. So every minute or every 30-minute candle that falls off readjusts the way that this entire thing looks. The best thing I could tell you is just take a picture of it. Even use the on demand, which is what I did. I went back and took a month's worth of on demand pictures every day at 6 o'clock in the morning. And I just jumped through the on demand. I had a month's worth of pictures in about 45 minutes. And you can compare them side by side, each one next to each other, and realize that this volume profile does not carry its shape through the day and morph into tomorrow. When you get up tomorrow, this thing is going to look completely different. So its only value is its immediate value right now. We are outside of the box, so we have every expectation of coming back into the box. If we don't get that, which is the way we say it, when what should happen doesn't happen, what's our expectation? That we go up into the box. If we don't do that and we continue to move far away, it's a part of the analysis. If we're moving farther away from the point of control, it's valuable to recognize that, to point it out, to be specific about it. We're doing what the market shouldn't be doing. And it takes a lot of effort to move the market farther away from its point of control like that. So the common thesis is that we should be moving into the box and then from the box towards the top. If everybody believes that and everybody begins to trade that way, and then they all get caught off sides, the market scrambles to get back on the right side of price. That's where significant squeezes happen. We see that most often when the market thinks it knows what the job numbers will be, and then they get surprised and they have to scramble, or they think they know what the PPI numbers are going to be, and they begin to trade before the numbers even come out, thinking they've got it. And then the numbers come out and they find out, oops, nope, sorry, wrong side. And they have to jump over onto the other side. Those squeezes are where we get some really significant, violent price action. For today, since we're bullish, we do want to focus on what isn't bullish this morning. Natural gas, bonds, everything else is either flat or positive. Remember, we have to have tech or we have to have finance. We have to have one of those two. Now, it's better shown with TradingView, so I'm going to bring that in. But while we're waiting on TradingView, we'll just stick around here and look at some of the legacy sectors versus the new, more modern style of the sectors, right? The EV market, for an example. Tesla, Li Auto, XPEV, NIO, all down. But look at your old school names like GM and Ford, they're up. And then, of course, you got Ride and a couple others, else Lucid. So there are a few EV markets that are up this morning, but they're more of the old school legacy names like Ford and GM who have dipped their toes into the EV market, not names that are just straight up old, uh, the more modern version of what we think of when it comes to the EV market. If we're going to turn bull today, all of these that are down, like NIO and XPEV and Li Auto, and especially Tesla, these will be my number one focus. Right, Tesla is one of those things that can grow legs and get up and walk. Right, forget walk, this sucker can run. So if we do turn bullish, these that are beat down here in the EVs, that's where I'm going to put my focus. We already know from the earlier discussion that it was energy over in Europe, and it's been energy on the day-to-day basis for me. Energy is a good thing to trade on a day-to-day basis. It's liquid, it's cheap. That sucker can make some pretty good moves. So we also want to take a look at what's going on in crypto. This is not just a set of crypto names, by the way. This is names that are heavily vested in crypto or are part of the blockchain, right? Heavily vested into the blockchain. So you can see that some of the chip names are down, AMD, NVIDIA, but then on the other hand, PayPal, Mara, MSTR. So there are some names that are up. I'd say be more specific when you come in and kind of ask the question like, why is NVIDIA and AMD down? And then other names that coincide with that in its peer group are not. And of course, the pot stocks. Seems to be a mixed bag. Get the stems out of there, should be all right. A little bit of wishy-washy here. Focus when it comes to the pot stocks, just like it with finance and just like with any others, you got one major sector, and then you can start breaking that down into different industries. Same thing with the marijuana sector here. You really want to focus on, what is it? Recreational, medicinal, CBD. What does it really focus on? And then what country is it? All right, that's been a huge point of contention when it comes to trading in the pot market. Pay particular attention to where it exists. Is it based out of Canada or is it a US market? All right, so TradingView got loaded up. We got the S&P 500, pre-market change percent. Use the filter to knock it down because we don't need 500 names. We just want the top 100. And that's usually really hard to hit. Just kind of get close. Ha! I nailed it. There's a lot of gray in here. And to get rid of the gray, or a large part of it, you can change the multiplier. And what you want to focus on is first MOT, monsters of tech. So Tesla, Amazon, Apple, all the big boxes, right? The boxes are shaped based on uh, market cap. So really big box, really big market cap. Where's tech, right? If the Nasdaq is trailing behind the S&P by 0.3 this morning, and it is, then these are the only things carrying it this morning. That says quite a bit. You lose these, you lose the Nasdaq. So for the S&P, why is this leading? Well, it has the financials. And as you can see, all the financials are doing really good, up 1.25, 1.5, nearly 2%. So a lot of finance helping the S&P this morning. And take finance, add it to the tech, the S&P is getting the juice, right? All the love and attention. Take and flip this over, put it into the Nasdaq. The Nasdaq doesn't have financials to help it out. We'll adjust the multiplier. Still pre-market change percent. All of the fangs except Tesla. Well, I guess not all of the fangs, right? With Tesla, Nvidia, both of those considered to be part of the MOT, both down. So we need those to get off the bench and get into the game, so to speak. Otherwise, other than those, everything else looks really good in the Nasdaq. So it's important to realize how much these three are holding it back. And of course, we can use the screener. This is a really great way to quantify how bullish or how bearish we are. So we're looking at the S&P 500. Nope, this is the S&P 100. And we're asking the question, how many names this morning are up at least 0.5%? 57. So 57% of the S&P this morning is up at least 0.5%. That's not bad. If we're going to be crazy bullish, I like to see this number getting somewhere between 65 and 70%. And then for how many names are up at least 1%, I like this to be somewhere in the 40s, maybe even the 50s. So S&P 100, how many names are up at least 1%? Only 25. We'll round that up a number. Now you can focus on which names or which sector, subsector, industry that can kind of lead you in the right direction, especially if you're going to expect it to flip over. Right? So that's the S&P. Where's the Nasdaq? 37 names in the Nasdaq are up at least 1%. So we have more names in the Nasdaq 100 up at least 1% than we do in the S&P, but the S&P is still leading the Nasdaq by 0.3 more. And the S&P is continuing to broaden and widen its gap. So for the Nasdaq as well, how many names are up at least 0.5%? 60. There we go. That's the kind of numbers that we want to see. But again, recognize the Nasdaq is trailing behind the S&P this morning. It's got more names that are bullish. It's got more names that are supporting it, helping it out, and it's still not keeping up with the S&P. And the major distinguishing difference or characteristic is the S&P has the finance. So what does that tell you? You really, really want to watch the finance today. Keep your eye on the bonds. Keep your eye on the dollar. Keep your eye on finance. I can't tell you how many times I take a flex grid like this and I just put something like KRE or XLF in there, right? Keeping track of finance as a indicator all by itself, right? Using a market symbol for an indicator. There's precedent to that. We do it all the time. Today would be one of those days. That's what I got for you guys. Be careful, be safe. I'll see you all in the main trade room. It's my day to stream. We'll kick that off around 9:10, 9:15 ish.